Global stocks close to all-time highs. Dollar erases early gains. Wall Street stocks finished little changed on Tuesday to begin a post-holiday week, with investors looking ahead to the government's monthly jobs report update on Friday. The economy likely added 671,000 non-farm payrolls in May, up from 266,000 jobs added in the previous month. The S&P 500 and the tech-heavy Nasdaq Composite shed 0.05 and 0.09% respectively, while the Dow Jones gained 0.13%. Asian markets were mixed on Wednesday. Stocks in Hong Kong and China retreated while Japanese stocks climbed higher. The data showed Australia's economy growing decently last quarter, with the output rising back above where it was before the pandemic. As such, the S&P ASX 200 in Sydney gained 1.05%. Japan's Nikkei 225 climbed nearly 0.5%. Bucking the trend, Hong Kong's Hang Seng and China's Shanghai Composite shed 0.58% and 0.76% respectively. European stocks advanced yesterday, rising for the second straight day near all-time highs. The Pan-European Stock 600 index traded 0.3% higher. In his latest remarks, the ESB's Nod said that the recovery in Europe seems to be going faster than expected. He also added that sustainable recovery is only possible if the coronavirus is contained on a global scale. Fresh data showed that German retail sales contracted 5.5% in May versus the previous month and expanded 4.4% over the past 12 months. In the Eurozone, producer gained 1.0% month-on-month and 7.6% on a year. A report from the Bank of England showed mortgage approvals increased more than expected in April. In the U.S., stocks rose slightly overnight, with energy stocks outperforming the broader market amid ongoing rally in crude oil prices. The S&P 500 gained 0.14%, the Dow Jones added 0.07%, the Nasdaq Composite rose 0.14%. All three indexes are close to all-time highs. The monthly Beige Book data accepted accelerating inflation woes, capping gains in equities. Central bank officials also said that the U.S. recovery has accelerated in recent weeks. Meanwhile, the U.S. 10-year Treasury yields retreated to 1.58% from levels above 1.60% seen earlier in the day. In currencies, the dollar gave up early gains to finish mostly lower on Wednesday as risk sentiment improved while Treasury yields slipped. As such, the euro-US dollar bounced from the 1.2160 area to regain the 1.2200 figure following a short-lived downside correction to three-day lows. The pound sterling US dollar bounced as well, turning positive for the day as prices derived support marginally above the 1.4100 handle. The US dollar Japanese yen failed to challenge the 110.00 barrier to retreat to the 109.50 region eventually. Oil prices hit the highest level in more than 2 years on Thursday after a decision by OPEC and allies to stick to the plan to gradually restore supply. The slow pace of the nuclear talks between Iran and the United States added to the upbeat tone in the market. Furthermore, the American Petroleum Institute reported a draw in crude oil inventories of 5.36 million barrels for the week ending May 28 versus negative 2.114 million barrels expected. The API also reported a build in gasoline inventories of 2.51 million barrels, while distillate stocks saw an increase in inventories of 1.585 million barrels. Brent crude finished at $71.20 on Wednesday before extending gains to a $71.80 area early on Thursday. Elsewhere, a private sector survey showed on Thursday that China's services sector expansion slowed in May. The Caixin Market Services PMI fell to 55.1 in May, down from 56.3 in April. Earlier this week, the official survey showed activity in China's services sector expanded at a faster pace in May. That is all for today. Thank you for watching. Please subscribe to always be in touch with the latest market news.